Going okay for the market, about 1/3% in the red, pretty much the levels at which we started off trade. But between that, a lot has happened, so keep that in mind. I wonder if VIX has shot up a bit today. Maybe. Nothing too alarming really, but no, even VIX is very, very quiet today. So nothing out there. Banks dragged down by HDFC Bank really. 4.5% gash, as a result of which the Nifty Bank is down 1%. But clearly, while HDFC Bank is doing what it is doing, and really the principal culprit, a clutch of other stocks helping the index stay at the levels that it is. Otherwise, for HDFC Bank to be 5%, Nifty Bank down 1%, and then Nifty just about 1% is pretty interesting. Bring up the heat map up on the screen very quickly and show you the key stocks. So while HDFC Bank will be right here at the bottom of the pile, and then a Titan, M&M, Tata Steel, etc., there is enough and more on the other side. Pharma predominantly, or healthcare rather, with Divi's, Apollo, Cipla, all of them in trade. But ONGC and upstream oil doing well, Reliance doing well, again courtesy that oil factor, and a lot better market breadth on the Nifty than what the index performance would have you believe. But that's as far as large caps go. The broader end of the spectrum to showing enough spunk in healthcare, oil and gas, and select other sectors. Good afternoon, Hersh.
Hi, good afternoon, Niraj. Yeah, absolutely. So let's pull up maybe the Nifty Pharma Index if we can, because that one is a buzz in trade today. That's the one index which is really in focus, 1% plus higher. And if we can pull up the constituents as well, there you go. You look at Laurus, look at Oro, look at even a Divis, 2+% up in trade. So very strong cues coming in from the Nifty Pharma Index, and we'll try to break some of those trends down as well. Mankind and JB Pharma may be the only ones which are decent or significant losers in trade today. Let's also pull up the Nifty Energy Index, and if we can have the constituents there as well, because there too we're seeing positive trends. So yeah, except for the couple of Adani names, you're seeing pretty much green across the board there. ONGC and NTPC leading the pack, but Reliance also up a solid 1+%. So underrated when Reliance moves 1% here or there. But anyway, let me also pull up some names, some specific names which are buzzing in trade. And you know, I'm going to start off with something like a GPT Infra. Well, that one is up and away in trade because of a 175 crore QIP. I'll stick with QIPs because Lloyd Metals as well. QIP opened at 732 rupees a piece. That one not doing as well. In fact, reversing a bit versus what GPT Infra is doing. Let's pull up some railway stocks themes. Ircon, 60% JV, 750 crore order from RVNL itself. Installation of tracks, that one is up and away, 11% higher. RVNL 2 MOU with the Delhi Metro Corporation, that one also up almost 18% now in trade. Thermax also a new order win. That's largely the theme for at least these three. 513 crore order win, 6% plus higher for Thermax. CG Power, not exactly an order win, but a joint development agreement with Skybound Realty to develop CG House. That one also up and away, 7% plus higher on that one. Sticking with realty, Mahindra Life Spaces as well, preferred partner for redevelopment of 7 societies in Bombay. GDV of roughly 1800 crore. That one is up just about 2%. Restaurant brands, of course, blocks happening yesterday, today as well. HDFC Mutual Fund seems to have bought as well, around 0.9% odd stake in restaurant brands. Along with it, if I can also highlight MedPlus, because we saw blocks on that counter as well in trade today, 3% lower on MedPlus. And then we had a slew of updates, of course, HDFC Bank, the prime of them. But outside of that, you also had Dhanlakshmi and Utkarsh Small Finance Bank with updates. Utkarsh clearly not doing well in trade, 3% lower.
Yep. Well, just flashes on your screen, and I think both Bajaj Auto and resultantly Shriram Pistons, because it supplies pistons to CNG bikes, both of them up in trade. Bajaj Auto has launched the CNG bike Freedom 125 starting at 95,000 ex-showroom. And look at that, this uptick that has come in Shriram Piston as a result of that, 5.3% higher in trade. Kunal Shah of LKP Securities and Avinash Gorakhshekhar of Profit Mart join in right now with their thoughts. Gentlemen, good afternoon. Thanks for joining in. Avinash, can I start with you actually? Because there is this news on Bajaj Auto. A CNG bike coming in. How big a move could that be for something like Bajaj Auto? And for suppliers, right? I mean, we know that Shriram Piston is the one which supplies pistons, the only one across the industry, but there will be other suppliers as well to this. Okay, tell us a bit about this.
Yeah, I think, Niraj, good afternoon. I think clearly, this CNG bike was awaited for a very long time. And I think the markets are quite excited considering that, a petrol, two-wheeler and a CNG, two-wheeler, the pricing is definitely going to be very crucial because if you look at the mechanics of running a CNG bike, I think clearly over the longer term, the value added to the customer is quite significant. And I think at least initially the management is hopeful that this bike will create a lot of excitement because Bajaj Auto is one of the first players to launch this bike. So obviously, a decent amount of volume growth could be expected in the current financial year. My sense is that, it's a new experiment. If it succeeds, then I think you could expect further volume growth expansion. And I think the markets are also looking at green energy as a viable option, because obviously at the end of the day, anything related to green energy, renewable energy is going up. As far as the auto component business is concerned, I think clearly Shriram Pistons has got an edge because they are one of the few players who can supply pistons to such CNG kind of motors, vehicles. And typically, I think once we come to know the kind of guidance, the management gives on the volume expectations for this product, at least for the next 6 to 12 months, that is definitely going to create a further kind of uptick for Shriram Piston because they are already OEM vendors to a host of other two-wheeler companies. And I think this part is a very critical part. It's an engine component part. So I think margins are also pretty, solid and quite decent. So I think net, that's the reason you're seeing a good uptick in both Bajaj Auto as well as, Shriram Piston.
Okay. Avinash, thanks for filling us in on that. Great analysis there. Okay, Kunal Shah of LKP with us. Kunal, good having you. It's been a while that we've spoken to you. So good having you today. How do you view the market? It seems a bit exhausted at these 24,300, 400 kind of levels. Would you initiate any trades on either of the indices, Nifty or the Bank Nifty?
Good afternoon, Niraj. Yeah, definitely. If you look at the markets, the broader markets in the last at least a week or so had been consolidating in a broad range. These were the large cap stocks, specifically the private banks and the likes of Reliance and Bharti Airtel, which were pushing up the markets over on the higher end. So clearly it was the headline index which was showing strength, but the broader markets were still consolidating. Yes, we have seen again fresh bit of buying in PSUs after a long time. So again, PSUs have run up quite a lot in the last 2 to 3 days. Yes, the undertone for the markets on the higher end, there is some resistance which is placed at 24,400 or 24,500 mark. But this is the part on Reliance. I think Reliance is something which is looking very strong on the charts, and probably that would support the markets as well. So it's a mixed view where your broader markets are not showing a lot of strength, but your headline index is showing a lot of strength. So for Nifty, 24,200, 24,150. This is a very strong demand zone. If you get into that zone, utilize that zone to buy, and again we can see some rally toward 24,500 again on the upside, which is the resistance zone. For the Bank Nifty index, the support is at 52,000, 51,800 zone. With the kind of fall what HDFC Bank has given in the last 3 days, that is where Bank Nifty has become weak. But I think if you get fall toward that support zone, again for the Bank Nifty, it will be a buy for me for targets of 53,000 on the upside. So Bank Nifty is still in a wait and watch situation. It's Nifty which is getting nearer to that support zone. If you get into that support zone, again initiate a long with a target of 24,500 on the upside.
Sure, Kunal. Now that's super interesting. So while you still believe that there's still some upside left for the Bank Nifty all the way up to 53, what's your sense with regard to which stocks will lead that Nifty bank rally to 53 if at all it were to come?
See, I think Axis is looking very strong on the chart perspective. So I think Axis Bank is something where the bullish view still continues. The stock is trading in a clear-cut uptrend where higher high, higher low formations are still intact. 1285 is somewhere the stock is trading. The support is placed at 1245. So continue riding your long positions. Even in fact, you can initiate fresh positions even at the current level. Looking for targets of 1320 to 1360 on the upside on the near term. So this is one stock which is looking very positive on the chart.
Okay, excellent. And just with regard to your picks, Kunal, just to get that out of the way.
So first thing, as I mentioned, that Nifty to continue the rally on the upside, Reliance participation will be strong. So constructively bullish on Reliance on the technical charts. It has given a flag and pole formation, and there's a breakout on the verge of the breakout. So clear cut, we will see a good momentum building up in Reliance going forward. So one can initiate long at the current levels for Reliance, keeping a stop loss of 3090 on the downside and looking for targets of 3200 to 3200 to 3220 on the upside. So Reliance is something which is looking very strong. The second, again, from the PSU packs that looks very good is ONGC. I think after a brief period of consolidation, the stock has given a strong breakout on the charts. There is volume-based buying, what we have seen in the stock as well. So this is a stock which is likely to surpass its all-time high level. One can initiate long at the current levels, keeping a stop loss of 279 and looking for targets of 302 on the upside.
Okay, excellent. So those are, of course, stocks on our radar today. But let's, the other one, the big one today at least, is Raymond. Stock has surged over 10% and the board has approved the demerger of realty as well as its traditional business. Mahima joins us with the key management takeaways and what the demerger means for the company as well as shareholders. Break this up for us, Mahima.
Right, Hersh, so as you rightly mentioned, now post the demerger, Raymond Group will be divided into three businesses basically. The first one will be the real estate business, which will be a separate entity. Then there will be Raymond Limited, which will have the engineering business and the denim JV. And then the third will be the lifestyle business. Now, in terms of why the stock is buzzing, well, the stock is buzzing because firstly, the company is net debt free after selling off its FMCG business. And overall, if we see from after the demerger, there will be value unlock in terms of capital allocation, and post this, the real estate business will be sitting on a net cash of around 600 crores, the management has guided that in the next 3 to 4 years, the revenues will go to 4,000 to 4,500 and they're aiming margins of around 25%. Now, in terms of real estate business, they are trying to focus on the mid segment and the luxury segment, and because of this, their margins will, there is a high possibility that the margins will be around 25%. Now, in terms of construction, there's around 6 million square feet of carpet area which is under construction for the real estate business. And for Raymond Limited, well, in terms of the engineering business, they are expecting the revenues to double in the next 3 to 4 years. So at present, their revenue in the engineering business is around 1200 crores, which will go to 3000 crores in the next 3 to 4 years, and EBITDA of around 500 crores is what they're aiming. So here also roughly the margin translates to around 25%. And for the lifestyle business, well, they're aiming a revenue of around revenue growth of around 12 to 13%, and EBITDA margins will increase from 15% to 18% is what the management is saying, and they're also investing around 200 crores in their suit businesses, which will aid further growth for the lifestyle business. So overall, I think that the pace at which the real estate and engineering business is growing, it will definitely unlock value for the shareholders, and which is why the stock is buzzing in trade today.
Well, value unlocking and how, but we also spoke to the CFO, Amit Agarwal. Thanks for that, Mahima, actually. You know, the CFO, Amit Agarwal, we spoke with him earlier today, and he sees growth in the near term. Listening to some of his, a piece of that conversation.
In terms of, I don't want to get into the guidance, but I can tell you, let's talk about the lifestyle business first, which is clocked almost 7,000 crore revenue. In that business, what you're talking about is roughly anything between 12 to 13% revenue growth, and EBITDA margin, which we are clocking 15%, can easily grow in terms of absolute numbers, anything between 15 to 18%. So that's on the lifestyle business. We are very clear, you know, the lifestyle business, the branded business is doing very, very well. In the last year, when the retail sector was weak, In spite of that, our branded apparel business grew by 20%. We are on a big expansion drive in terms of the store expansion, distribution reach. We opened 200 stores. In the next 3 years, we plan to open another 500, 600 stores. So I think very, very clear. Second thing, as I talk about the exports in the engineering sector, I think we feel very bullish to be in India because at this juncture, even the China plus one is playing very, very well. In the garmenting sector, which we supply to the big brands globally, we are investing 200 crores in order to become the third largest suit maker in the world. So I think that is a journey which is also helping and propelling to achieve a good revenue growth as well as moving into. Second thing, if I talk about the real estate business, very, very clearly, I see that achieving a 4,000, 4,500 crores over the next 4 years, 3 to 4 years is very, very feasible on revenue and the EBITDA margin around 25%. The third piece, if I look at the engineering business, I think from a current 1,900 crore, easy we can achieve with 270 crore EBITDA. I think we can easily achieve to a 3,000 plus crore of revenues and a 500 crore of EBITDA. So I think we have a very game plan around these businesses and we are net cash available, net debt free across the group. We are prepared to invest and clearly unlocking the shareholder value.
All right, very bullish commentary coming through from Raymonds. This is a 21 to 22,000 crore odd market cap after the 11% gain that we've seen today. And Avinash, if I can come to you on this one, because it's been a doubler since in the last 7 to 8 months. So there's wonderful opportunity to buy the stock maybe just about less than a year back. And literally it's doubled from there. How much of this value unlocking has already been realized? Do you still expect some way to go in terms of value unlocking here, or do you believe that it's fully priced?
I think my guess is that, I think to a large extent, some part of the value unlocking potential has already materialized in the stock price. But I think some further re-rating can happen, once the actual demerger process is completed. Because I think there's a lot of value in the lifestyle business, in the real estate business, which will get listed separately. And I think the bigger beneficiary will obviously be the shareholders of Raymond, those investors who have invested about a year back. I think for them, I think they should hold on to their stocks. But anybody who wants to buy fresh can obviously look at the real estate business once it gets listed separately. Because my guess is that this is one opportunity where Raymond will do exceedingly well. They've got a very good land bank, a very good positioning in the middle and luxury market segments. And the market condition as of now is very conducive. So I think, real estate as a piece can definitely outperform significantly. So I think even the lifestyle business, 12-13% growth on a base of 7,000 crores is definitely very solid. I think looking at the kind of brand pull and the kind of premium which, Raymond enjoys in this segment, this is also one opportunity where I think investors could lap it up once it's separately listed. So, clearly somebody who's got at least a 2-year view can think of, buying in small bits and pieces, even at the current odd levels. Wait for a mild correction because, today the stock is up by 10-11%. Typically, once the news, gets a little older, you get some profit booking opportunities also here. So that could be a good time to buy on declines. And I think keep a time frame of at least 12 to 18 months.
Excellent. Thank you for that. Breaking that down quite comprehensively. Realty is on Avinash's radar, of course, but time to slip into a short break. On the other side, we'll discuss the buzz, what all the buzz is about, in fact, with regard to pharma stocks with Vishal Manchanda, who is going to be joining us after this very short break. Stay tuned.
Okay, a sector in focus today has to be pharmaceuticals. Not just today, yesterday too, the stocks were a buzz. Vishal Manchanda, who looks at this very closely. Johnson right now with, trying to tell us about what could be some of the reasons in focus. Vishal, what have you observed in the landscape in terms of a change that might have led to this? Is it sectoral rotation, or are there some fundamental reasons or developments that would have happened?
Yeah, so I think this is primarily sectoral rotation, and obviously there is a good flow of liquidity in the system that's helping stocks broadly. Pharmaceutical, if you look at the space is defensive, and if you look at the near-term earning performance, that's pretty strong for most of the large names in the space. The API prices have come down lately, so I think that should benefit the domestic pharmaceutical companies in terms of gross margins. So I don't think there are as many. So there are no new levers that have come up for the space. So only thing that's happening positively for the space is potentially for the CDMO names in the pharmaceutical among the pharmaceutical names. So there is a Biosecure Act that's happening in the US, which is probably going to bring some additional demand for Indian companies. So I think that's the positive thing for the sector, but it's yet not finalized. That Biosecure Act is yet to be finalized.
Exactly. I was about to ask you that even if the benefits come in, those are probably some time away, right? So could it, so therefore you're saying it's sectoral rotation. Could there be some elements? I don't know what's expected. What do you expect in Q1? But could there be surprises there? Or is quarter one result expected to be a tepid quarter? Any thoughts there?
So Q1 is likely to be stronger for most names. So versus Q4, I think Q1 will be stronger for most of the larger names. So that's again domestic is also domestic, which has a seasonal bias, which will also be strong in Q1 compared to Q4. While in US we have certain tailwinds in companies, so they have new launches that's going to help the Q1 numbers. Lupin, Zydus, even Reddy's potentially would have a better Q1 versus Q4. Even Sun Pharma can show a better performance in Q1 versus Q4. We are yet to finalize our Q1 estimates, but that's broadly the sense we have on the Q1 numbers.
Sure, Vishal. Vishal Hersh also joining in. Want to try and get your view. Why is there this meaningful positivity with regard to the Q1 numbers? If you can just break that down for us, what's the sense like? What's driving this?
So I think one is on the domestic. In the domestic side, we'll have lower API prices helping margins in the domestic branded formulation market. That is one. Second, on the US front, there are large launches that have happened in the last quarter, which is going to meaningfully help the Q1 numbers. So not across the board, but Zydus would be the largest beneficiary of this launch momentum that's happening in the US. Second probably would be Lupin, and then Reddy's or Sun Pharma would be the other beneficiaries. Cipla more or less should be flat, I think, in the US QOQ.
Understood. And you spoke about the CDMO business being or showing signs of positivity now. How quickly do you think this will turn in your view?
I think in terms of reflecting in numbers, it will take a bit long. So what will imminently happen is a positive commentary from companies in terms of request for a higher number of requests for proposals. So that will translate into addition of clients to the business, and then probably numbers will take about 1 to 2 years to kind of reflect in numbers.
Understood. Vishal, just from a valuation standpoint, where are we in terms of margin of safety, and where are we in terms of pockets of value? What are you seeing? What are your top picks?
I think right now, if you look at the sector, the most important thing for the sector to move up from here would be how they allocate the capital that they have been recent. So if you look at the balance sheet of most large pharma names, they have cash surplus, and they're quite significantly surplus. So how do they deploy the capital is the most would be the most meaningful driver for the companies going forward. If you look at the base business, I think just on the base business, I would think the stocks are a bit overvalued now, and we should rather pause. So I think it's time to pause and look at how companies deploy the incremental capital that they are building on their balance sheet. So that's how I would chase the sector.
Okay, Vishal, great having you. Thanks so much for putting this into perspective. No key reasons, no new reasons per se, as per Vishal Manchanda, but maybe some bit of sectoral rotation out there. But the stocks have certainly had a up move. Kunal, last 2 days, from a Lupin to an Oro to a Lotus, all of them have had 2 days of an up move. Are any of them near key resistances or key breakout levels? Any thoughts? Any calls?
I think firstly, Niraj, I'll talk on the pharma index. So I think pharma index, after a brief period, we have seen some buying momentum which has resumed in the last 2 to 3 sessions. If you look at the overall pharma chart as well, the chart on the long-term time frame is still trading in a broader uptrend, where high low formations are still intact. So I think this uptrend is likely to continue and extend, where I expect the pharma index to go towards the mark of at least 21,000 in the very near term. So even from the current levels, if you look at 600 points on the upside on the index is still pending. So clear-cut, the momentum is very, very strong on the index perspective. Yes, there are certain stocks which have ran up too quickly. Specifically, if I look at either Oro Pharma or whether it's a Lupin or whether it's a Sun Pharma, yes, the breakout has been very strong. They have surpassed their previous resistance and swing high as well. So I think this momentum is likely to continue on the upside for the entire sector and for the entire space as well. So nothing as such where I see some resistance coming in. Only one stock which I would like to highlight over here is Sun Pharma. So Sun Pharma on the higher end, just the immediate resistance is at 1580, currently trading at 1566. So once that 1580 is also taken out, we can expect even further rally on the higher side towards 1630, 1640 zone. So clear-cut, it's in a bullish momentum, whether it's mid-cap or whether it's large cap. I think everywhere you will see that buying momentum continue in the entire pharma space.
Okay.
Sorry.
No. Okay, let's take a break on that note. We need to slip into one. But as we hit that break, all day today, we've remembered the great Rakesh Jhunjhunwala, or the big bull of T Street, on what would have been his 64th birthday, or actually his 64th birthday. As part of this, we spoke to market veteran Ramesh Damani about the vision for India over the next 25 years, inspired by Rakesh Jhunjhunwala himself. Listen in to what Ramesh had to say.
He taught us was that we need to always remain invested, okay? And while markets are cyclical, they'll go up and down, and there are periods in which you can, buy and sell. But broadly, you want to remain invested in the market. So I think, and not only him, the other greats of the stock market, I've asked them this question in multiple ways. And the ways is, okay, you've been in this market 4 decades. Which is the best decade that you've seen? Was it when liberalization happened? Was it in the tech boom? Or was it now? The answer question. And both of them would answer, or all of them would answer with the same breath, that the next decade is the best. So I've come back to that phrase that, the best time to invest in India was, of course, in 1991, when Manmohan Singh stepped up and gave the famous liberalization budget for the interim government. That changed the trajectory of our country, and now it's absolutely clear as you look back 30 years that that's what the trigger point was. The next best time to invest in India, and I'm sure Rakesh would agree with me on this, is today. Because you can't win this game if you don't play this game. Unless you invest, you're not going to profit from it. So I would suggest what he would say is that be bullish on this country. This country is a unique opportunity to become the third or the second largest economy over the next 20, 30 years. And you need to participate in that economy in full measure. And whether he says it or whether I now repeated him as a parrot, I also tend to believe that. While occasionally we'll move for cash or move from one stock to the other stock, we enduring remain bullish that only good will happen in this country. I think that's the lesson I've learned from him, and that's the lesson I'd like to pass on to the next generation, that you need to remain invested. To win this game, you've got to play this game. If you're going to be scared of volatility, which is the nature of the beast, it will happen every day. I mean, right now the market's going up. On June 4th, it was going down. Volatility is the nature of the beast. So don't be scared of volatility in the market. Be scared of permanent loss of capital. And I think luckily we're on a good wicket that we won the ovarian lottery by being Indians, as Warren Buffett might say. But luckily, I think we're in the right place at the right time. So my advice to everyone is, this is as good time to invest. I've been asked this question so many times at 40,000 index, 50,000 index, 60,000 index. Is it too high to invest? Isn't the market gone up too much? If I got a few dollars for that every time, I'd be a billionaire. I would have come up through my limitations, Niraj. But having said that, you could look at the index at 6 figures and say, oh my God, is it too high now? So, that's a mug's game. I don't want to play that. I want to remain bullish. I want to remain invested. Advice I got from Bhaiya, advice I also believe in.
Well, thanks for staying with us here on India Market Close. We've Agam standing by as always with a breakdown of the FNOQs for today. Agam, what are the futures and options really indicating? What's the data saying? And how are markets being viewed in this context?
Sure. Well, it's been a quiet afternoon this Friday, and perhaps on expected lines too, because we've actually had and seen markets hit new lifetime highs through the course of the week. Today is a day where I reckon that some traders will just put the foot on the brakes just a tad bit. So we are actually looking at flattish movements in the Nifty and unwinding in the futures. The Bank Nifty, again, what we're seeing is flat and unwinding in futures here as okay, pardon me. So again, as far as the Bank Nifty is concerned, a decline of around 0.9%, and open interest again declining by around 3%. Now, as we move into the new week, we are working with a roughly 500 odd point range, and while we do have maximum open interest in the 24,200 put, the lower end of the spectrum will certainly be 24,000. That's the psychological support, as well as where you have significant amount of put writing coming through. Of course, on the higher end, a relatively weaker 24,500 is what we're keeping an eye on in terms of a resistance coming in. And moving on to stocks, again, it was a reasonably good day of trade for at least those which are advanced. UBL and Divi's Laboratories along with ONGC looking at more longs. HDFC, on the other hand, single-handedly bringing the entire bank Nifty downwards, taking a knock of around 4.5%, and shorts building in there clearly because of around 12% added in open interest for the futures. And among stocks which are unwinding, well, we have short covering for Gujarat Gas, Hindustan Copper and Nalco. All in all, a reasonably good day of trade, at least as far as the Nifty is concerned, even though it is ending in the red because the kind of profit taking that we've seen is not that significant. Bank Nifty, on the other hand, is a completely different picture, but that's only on account of HDFC Bank. Save for that, it's been a fairly quiet day of trade today.
Right, thanks so much for that, Agam. Kunal, let me come to you just with regard to a couple of names that Agam mentioned, especially the one that really stood out for me and is standing out in markets today is HDFC Bank. What's the sense like now on charts? It was, in fact, till early this week, it was going great guns with most analysts suggesting a buy. So what's really changed now, and what's your position on it?
Yeah, I think if you look at the charts, on the higher end, the resistance was at 1720, 1730 zone. And since today it is going to be a weekly close, on the weekly chart, it has formed a shooting star pattern, or you can say an inverted hammer at the top, which is generally a negative reversal pattern. So for me, now the resistance is very strong on the higher end. If you get any pullbacks into the stock, utilize that to sell the stock. So for me, the resistance is now placed at 1700, 1710 zone. So if you get a pullback over there to those levels, again, that could be an opportunity to create a short. Again, looking for downside targets of 1640 to 1620 on the downside.
Okay. Well, and the question for HDFC Bank fundamentally is that does this, for example, justify the kind of numbers that came in, and with this price downtick, what are the kind of valuations that it is trading at, and more importantly, what's next? Hersh, fill us in.
Well, thanks for that, Niraj. What you're seeing just in terms of growth from a background perspective, you're seeing flat deposit growth, but Q4 FY24 was a 7.5% growth on a sequential basis. So where deposits is concerned, flat sequentially, but on a higher base, and therefore not looking as bad. What's really looking as a bit of a concern currently is on the advances side of things, where advances have shrunk up about 1% on a sequential basis, and they grew, in fact, in Q4 FY24 just by 1.5%. So essentially, over the last 2 quarters, the advances growth has been far and few. It's been very, very muted. It's been less than 1% over 2 quarters, which is honestly extremely slow and sluggish. So that's where one of the key weak points is at currently. You're looking at CASA also, which is seeing a downtick of roughly 5% sequentially. So you're seeing some erosion on the CASA front as well. Now, just in terms of, that's how the picture actually plays out. But a 15% growth on advances and 70% growth on deposits means that you're essentially losing market share for someone like an HDFC Bank, especially on the advances front. Expected, yes, but such a muted quarter, maybe not as expected. Now, just in terms of what brokerages seem to be suggesting, and let's quickly, break down what are the 3 key monitorables first. The loan to deposit ratio is going to be something that the street continues to monitor. It's flat sequentially at 105%. So above 100% loan to deposit ratio continues. The street will be waiting for that to reverse. The other 2 yet to get disclosed for Q1 FY25, margin expansion. How quickly can they go to that 3.8 kind of margin number which they've guided for, and EPS growth, which is what the entire street is really waiting for. How much are they growing on EPS, and how quickly can growth come back in a big way on the bottom line? Quickly, first off, on to some of the brokerage notes that are coming through. Deposit growth, slightly disappointing is what Jeffries calls it. they are looking for the deposit growth trend going forward, but also on margins and OPEX in this quarter. So that's something to look out for where Jefferies is concerned. They continue their buy rating. Now, Nomura, more neutral in their stance. Really, they are suggesting loans and deposit growth was below estimates and continues to run lower than what they are anticipating even for FY25. And but on the positive front, they're saying that some amount of course correction is underway, not completely done. LCR, they believe, has risen sharply, which is a positive from a liquidity standpoint, but a negative from a margin standpoint. So keep your eye out on that one because Nomura thinks margins may just decline. Last off onto Bernstein. Well, they believe that it's yet another weak quarter, first quarter for HDFC Bank. Lower CASA might offset the gains from a better loan mix is what they are believing in. But slower growth and slower growth from an advances standpoint would help if deposit growth had come or had come well, at least 1+% kind of deposit growth number. But that's not happened. And therefore, that may likely not translate on the profit and loss numbers.
Okay, so that's as far as HDFC Bank goes, and we've spoken about that at length, of course, so won't really dwell too much on it. But for asking maybe Avinash, we haven't spoken about HDFC already. Would you be a buyer here or would you buy any other private bank?
No, I think clearly, Niraj, the other banks like Axis Bank, ICICI Bank, and even public sector banks like Bank of Baroda, Canara Bank, I think these offer a better opportunity. In fact, these numbers are not so impressive that, probably you'll see a significant amount of re-rating in HDFC Bank. I think what kind of numbers finally come out after the Q1 and what is the kind of management commentary is going to be very important. The management commentary is very crucial because the market would like to understand as to whether it is just one bad quarter or it's going to be another couple of quarters before this slow growth actually, improves going forward. So I think HDFC Bank, we have been telling our clients to hold on, but fresh buying after this, input from the company, we would be a little cautious and we would prefer to wait for the management commentary and the results to come out.
Okay. Well, that's on HDFC Bank. But despite that, I think the indices have just moved back into the green. Just look at the market. A bit of a spike there. I wonder what stocks. Pull up the Nifty 50 top performers, the gainers and losers. Not the point contributors, the gainers and losers. And let's just see what's moved. No, this is the point contributors. Let's leave that out. But if you look at this, okay, ONGC is inched up further. Reliance. I think SBI and Reliance. Yep, Hersh is right. 2.43% now. I don't know if this has got to do with this whole news floating around that there might be a Reliance Jio IPO, maybe the largest ever, that is spurring it. But pull up the intraday of Reliance Industries and you will see RIL, the big boys actually led the indices higher in the last few minutes of trade. There, the spy on Reliance Industries coincides with this announcement of, not this announcement really, this news about maybe a Reliance Jio IPO coming soon. Well, that makes telcos completely listed, say for maybe BSNL, but yep, this could be interesting here. Kunal, a quick thought on RIL 3180, 3181. Is there a trade here?
See, definitely, Niraj, as we spoke on the start of the show as well, my two calls, one was Reliance and one was ONGC. So I think both have started to move up. As I mentioned, Reliance is a flat breakout on the technical charts. So I think, yes, the moves are still pending. What I expect for Reliance is 3220 on the upside in the very short term. So continue holding your long positions. And even if it goes below 3220, it can even go to 3300 on the upside.
Well, Reliance Industries and big mover today, Hersh, both of all upstream names actually showing a lot of spunk. Reliance, of course, might have other reasons around telcos too, but both of them have done really well.
Yeah, and let's actually also take it to Avinash because the whole play on telecom and the hike in tariffs has really contributed to Reliance coming back to the fore, Avinash. We've seen Reliance do well for now almost a couple of weeks on the back of this news that's been, that's led the stock higher. What's your sense just with regard to what kind of a number does this give or what kind of comfort does it give in terms of valuations now?
I think, Hersh, this is definitely a big positive. In fact, if it does fructify, then I would not be surprised that we could see some further re-rating, because there's going to be a lot of value unlocking from the Jio business. And I think clearly if that happens, that would definitely be much ahead of what the street was expecting. My sense was that earlier the retail business could get value unlocked earlier, and then the Jio business could come in. But now I think with these reports, it looks that some homework and some planning has been done by the management, and very soon, if everything goes well, then I think looking at the market conditions and plus the kind of strategy the company is planning, we could obviously see this value unlocking happening very soon. And that definitely means that this rally will continue for some more time, because obviously a lot of value will materialize for the parent company, that is Reliance. But I think on a standalone basis, Jio would definitely command a very decent premium in the current telecom market. Telecom market has been improving quite well. Pricing power has been coming back. And I think that would obviously aid the valuations of this business. So I think, we'll have to wait and watch, but something definitely seems to be cooking. And that's the reason the stock has moved up quite significantly.
Okay, Avinash, thank you for that perspective. Reliance now up 2.5% in trade. And, Niraj, just to kind of contextualize the market at the moment, we spoke about how the benchmarks aren't doing as well as the broader markets are. But if you just remove the one biggest loser, which is roughly 150 points contributed negative by HDFC Bank, the markets are doing surprisingly well, even when they're at the top. So essentially, it's not that bad of a day, if that's probably one way to look at it.
Yeah, I mean, well, it is the glass half full way to look at it. But the only problem is, hopefully Monday there is nothing else that comes back and kind of takes it lower. So let's wait and watch. But real estate has not been too bad either. We were talking to Murtuza Arsiwala today of Kotak about why there is optimism there. In fact, Knight Frank has released a report on the sector's business data for the first half of 2024. The question is, which cities see more launches? Does the sector have more steam left? Are there players to bet on? Anushi Johnson to put that into perspective. Anushi, good afternoon.
Hey, afternoon, Niraj. So quite an interesting set of data that we've gathered from this Knight Frank report. So now this continues about the launches, the sales, and the kind of inventory levels that we should be watching out for. Now, the momentum in the sales and the launch momentum has continued, 11% growth in sales. Now, this was propelled by some of the key regions. If we look at now, again, Mumbai, Pune, Bangalore, some of the key players that are leading to this growth. However, NCR sales, if we look, they have remained at an all-time high in 2023, but has seen a bit of a 4% of a downtick compared to in this first half, that is the Jan to June period. Comparatively. Now this is again on a base of a higher base as well. Now even the sales growth which we are looking at, overall 11% growth coming in from, this is from the higher segment, higher premium mix, that is the housing units priced over rupees 1 crore. If just look at the kind of mix that these ticket sizes have had, 30% and 38% was what in H1 23. Now this has come down to 27 to 32%, and this share has been taken over by the housing units which are more than rupees 1 crore, 41% compared to 30% earlier. Again, looking forward to what we can expect in the shift towards the premium side, as seen 51% growth, sales in this 5 to 10 million and 5 million, below the 5 million bracket, have continued to simmer down. In fact, even if you look at the sales for the last 5 years, they have gone down by 5 half-yearly periods itself. But the main topic for discussion is the unsold inventory levels, where we have seen an uptick over here, 1.65 lakh crore in Mumbai, NCR about 1.05 lakh crore, but its main regions like Ahmedabad, Kolkata, which have seen their unsold inventory levels going up over significantly, which again leads to this question of supply increasing as compared to the demand. But what Knight Frank highlights over here is that we have to keep this metric in mind, which is the quarters to sale. Though we have seen this inventory levels going up, if you look at the overall time period in which the sales inventory is getting exhausted, it is still comparatively lower, which shows a healthy sign of the market. So despite seeing this 27% growth, the QTS levels for the top 8 markets have declined from 9.5 to 5.9 quarters comparatively. So again, healthy signs of residential market continuing. Now, stock performance-wise, Godrej continues to lead the pack here, 50% of gains, followed by Brigade, 51%, and Lodha, Prestige, all following on suit. So management outlook also for FY25 continues to remain on the stronger side. DLF plans launches of about 36,000 crore for the coming year. Godrej, despite seeing about a 135% growth in their pre-sales, expect about 20% of a minimum upside in their pre-sales growth at rupees 27,000 crore. Even Macrotech, for that matter, consistently over the years they've maintained that 20% of growth guidance for pre-sales, and it continues to do so. So again, to just end this discussion, our topic remains on the inventory levels, that it is an important metric to look at as compared to just the pre-sales and the sales number that we look for these real estate players.
Thanks for that, Anushi. Thanks a lot for that. As we speak, some of the real estate names even in today's session have done well. Anantraj is a case in point, by the way, up 4.7% higher. And a lot of real estate names have done well, not just because of pure play real estate or residential sales, but because of allied business along with them. It doesn't seem to cease giving up the gains, Avinash. What within real estate do you like more?
I think, the larger players like DLF, or for that reason, companies, which are in northern India, specifically Anantraj, which we had earlier also suggested on your channel. I think clearly larger players like DLF, and I think Mumbai-based players like Oberoi Realty, or for that reason Mahindra Lifespace. These are companies where I think a lot of visibility is there. The inventories are also moving pretty well. And I think specifically if you look at the Gurgaon market, prices have shot up by 30-40% in the last 6 to 8 months. Typically, I think, the real estate market continues to be in a sweet spot. Inventories are moving. And despite the fact that interest rates have been relatively high, I think, there's no dearth in demand for the middle and the luxury, segments in the market. So I think clearly, of course, the affordable segment is also a growing segment. But I think companies which are present in the luxury and the middle kind of segment are companies which one needs to watch, because I would believe that in the first quarter, you could see a lot of margin expansion, for these companies. And I think hopefully, if some announcements come out in the budget, then I think you're going to see a further re-rating in these companies. I think the real estate cycle also definitely has picked up very well. There's a lot of liquidity in the system, and I think good amount of delivery buying has been happening. So that also has added to the appetite, and many new projects launched by these companies.
Sure, Avinash. Avinash, just trying to understand the risks involved here. The index has been up 33% over the last 6 months. Year to date, up 40+%. Multi-bagger over the last year or so, 12-month returns 112+%. And from COVID lows, it's up 6.5 times. So just wanting to try and understand what could play a spoil spot here. What could be the couple of factors outside of demand maybe, which doesn't seem to be showing any signs of a slowdown. But what outside of demand could possibly play a spoil spot?
I mean, this is related to the real estate sector.
Yes, please. Yes, please, Avinash.
I think my guess is at least, Hersh, at least for the next 3 to 6 months, we've been talking to a lot of builders, and I think, the mood on the ground is that at least for the next 6 to 8 months, I think demand continues to be rock solid. Unless there is some sort of, kind of major price correction or a price crash in key markets. Of course, if more supply comes in, because that's the only worry for real estate companies. At least in the next 6 to 8 months, I don't think any major supply is going to come in the market, and which is going to disturb the price momentum. Markets like North Delhi, or for that reason Gurgaon, Mumbai, I think these markets are steadily absorbing whatever supply is coming in the market. So I think that's the only risk. I think if you look at the liquidity point of view, there's enough money in the system. Apart from equity, there are a lot of investors who have been investing in good quality real estate assets. And I think this time the real estate rally is backed by something solid. It's not purely, investment buying. People are buying houses, especially a second house or a third house, as a kind of a, actual kind of investment for living there. So typically, I think, it's too early to say whether a crash would come. So I think, at least till the September or December quarter, I don't think this rally is going to stop. I think, in fact, if interest rates do come down, Hersh, that will add some further, incremental benefit to the rally, because interest rates, the way they are, very strongly, possibly post-September, we could see rate cuts happening, and that definitely could be a big value driver for these companies. So I think at least near-term prospects look good. I don't think there's anything to be panicked. Yes, but wherever stocks have moved up very fast, I think there one needs to be very selective. I think the broader market also has gone up so fast. So I think one has to be a little choosy and selective in zeroing down on only specific companies where there are key triggers. Because the market is definitely now very clear that everything and anything cannot go up. Valuations will do matter, and that's why I think we have been positive on Anantraj for a very long time. Now, of course, the stock has been covered by a large institutional brokerage house. But I remember around 350, 400, the stock did not enjoy any premium re-rating at all, despite the fact that it's got a 300 megawatt data center capacity, which is among the largest, within India.
Okay, thank you so much, Avinash, for that perspective. Kunal, we're literally 3 minutes from closing. Top BTST, STBT idea strategies. Of course, we have a weekend in front of us.
See, I think the oil and gas space looks very attractive to me, and I think there is further momentum that could build up here. So for me, the BTST would be GAIL. The stock has seen a good base formation on the lower end, and the stock has been trading in a good uptrend. It's on the verge of a breakout as well. So 223 is where the stock is currently trading. One can initiate a long at the current levels only, keeping a stop loss of 218 on the downside, and upside looking for targets of 230 to 236 on the upside.
Anything else, Kunal, or is this the only one?
Only one.
Only one. Fair call. Gentlemen, Kunal as well as Avinash, gentlemen, thank you so much for taking the time out and being with us today and giving us your thoughts. Maybe we didn't mark the GRSCs and the NBCCs of the world today on the charts, but maybe we'll do that as the market wraps up. But here's how the markets are shutting off today. A day of, you could argue, consolidation, because we went up or down between 0.5% here and there and are ending very, very flat. In fact, ending as flat can be. And courtesy, I think, the tug of war between Reliance and HDFC Bank on the points side. HDFC Bank lost out on a lot of points. Reliance has actually contributed to that. And if you just bring up the points contribution here, before we get the heat map up on the screen, and then Hersh will talk about the large caps. Reliance trying to negate to an extent the kind of damage that HDFC Bank laid out. Hersh was right. If you remove HDFC Bank, then the market has actually not done too badly for itself. But oil upstream largely doing okay. L&T contributing a little bit. SBI and some of the other banks also contributing a little bit. And the heat map will show you that aside of ONGC and Reliance Industries, there is pharmaceuticals which is up there. So Cipla up 2%, there is Divi's up about a couple of percentage points. So those two have done well, and the broader end, some of the other stocks also haven't done too badly. What has not done well? HDFC Bank, Titan, and LTI and Mahindra & Mahindra amongst others. Hersh, very quickly, mid cap and small cap end of the market.
Well, the broader market's not doing badly at all. In fact, Niraj, 1/3% higher, or rather 2/3% higher on the Nifty mid cap as well as the small cap. So plenty of positivity there. And let's try and pull up the sectoral heat map as well. Because what you'll see there, energy doing very, very well, likely led by Reliance over there. But the PSU basket also has done fairly well. Now eclipsed by Pharma, which was probably the best performing sectoral index at the start of this show. But clearly, banking and finance is the top laggard. Let's pull up the energy index because what we'll likely see is Reliance has done exceedingly well. But outside of that, ONGC also doing very well for itself. And TPC Power Grid also doing fairly well on an otherwise what's supposed to be a difficult day, at least on the benchmark. Power Grid, NTPC, Reliance, all three contributing quite well. And let's also, quickly try and switch our focus to the BSE 500 top gainers, top losers, if we may. And there you go. Yes Bank up 11%. I mean, the numbers were strong, but 11% is that there has to be something else happening there, and we'll have to try and figure what. But RVNL is the other one, hitting it out of the park. Raymond doing very well. Ircon as well. Order wins again. Ircon, RVNL doing very well on the back of order wins. Supreme Petro is up 9% as well. So that's one stock to keep on our radar for tomorrow as well. Among the losers as well, on the BSE 500, the top loser being HDFC Bank. Well, that's a bit of a surprise. But MedPlus down 3%, PB Fintech also down 3%. What a run that one has had. Vedant Fashions and KPIT Tech among the others, which are the top laggards in trade.
Yeah, it'll be interesting to analyze the F&O activity over the weekend on a HDFC Bank because there might have been some longs on that expectation of that MSCI weight change. But yeah, decent showing. Pharma has done well. Some other stocks have done well. PSUs have done really well. So net, a day of consolidation after running around everywhere with PSUs and oil and gas leading the charge. But for now, from Hersh and me and the team that put this show together, thanks so much for tuning in and have a great weekend. Watch out for the non-farm payroll data from the US and we'll see you Monday morning with the markets.
Well, India's biggest bull, the eternal big bull, Rakesh Jhunjhunwala, was born on 5th of July 1960, and as a mark of a little bit of celebration on his birthday, we have compiled together a list of predictions that he made, which actually a lot of which have come good. But really, the legend of an investor who's clocked 50% plus returns as per reports, he made a couple of scathing predictions, especially during the lows of COVID, starting October of 2020. Let me first take it to his first prediction.
It's going to be a relay race, boss. It's going to be a relay race. Everybody's going to participate by turn.
Well, he essentially alludes to the fact that we're at the start of a bull market and a secular bull market of sorts. So what he's suggesting in October of 2020 is markets will rally in a big way. Now, what's happened over the last 5 years, in fact, pre-COVID, from the sub 12,000 kind of number, the Nifty 50 currently stands at 24,000 plus. And the Sensex also, from the COVID lows of sub 30,000, maybe even sub 28,000, currently stands at 80,000 plus. And clearly that bull market seems to have played out.
There'll rarely be a different name that will come to mind when you talk about India's biggest bull. And we are remembering India's biggest bull, or what would have been yet another grand birthday for Mr. Rakesh Jhunjhunwala, with somebody who is arguably one of his closest friends and associates, Mr. Ramesh Tamani, the great Mr. Ramesh Tamani. Mr. Tamani, great having you in our studios on this momentous occasion of sorts, because Indian markets are enjoying a bull market, which you love to see and which he would have dearly loved to see.
You know, Niraj, of course, you're right. Thank you first for inviting me to your beautiful, swanky studios. I really enjoyed my tour here. And you're right, we're celebrating his birth anniversary. I think he'll be 64 on July 5th, which was his birthday. You know, he's been called various names, Niraj. He's been called the Big Bull, as you called him. You've been called Bhaiya, he's been called Rocky, he's been called a rock star. But I think I'm going to add one more name to him called Nostradamus, because he had predicted what we are seeing today, even 5 years back, that India would have the mother of all bull markets, that more importantly, it would be led not by foreign money, but by Indian public money. And he always used to say that he sees India taking its place in the league of important nations, Japan, America, China, in the same vein. And I think no one saw the India of today as it's evolving clearer than Rakesh Jhunjhunwala. So there's also a debt of legacy that we owe him for his very brilliant calls. And of course, there's enormous missing him nowadays. When I go to a budget party or go to a Diwali party or go to any social gathering, his presence is deeply missed.
Yeah, I remember some of these things, Ramesh, when you told me some time back as well. Sorry, the affinity for Mr. Ramesh Damani makes me call him Ramesh. The respect for him makes me call him Mr. Damani. So I'll intersperse between the two.
Ramesh is fine, Niraj.
Just the respect that I have for you.
Thank you.
But yeah, and I believe all of us had that respect for him as well, for his uncanny ability to make calls. You've been brilliant on that as well. And I'd love to end this piece with some of your thoughts, which kind of emanate between a thought process that maybe the two of you might have formed together also, who knows. But, you know, one of the most vivid memories of the first conversations that we did after his unfortunate demise was you telling me that he fashioned mud into jars, wherein other people fashioned mud into bowls. Now, I would love to understand this in some more detail in the current context. I mean, what would you think you would do currently? What would you think he would have done when the India opportunity is expanded the way it has right now? I'd love to understand how you think he would have thought about the opportunity that has come right now, because it's not just domestic money that is shaping the gains, but it's also domestic companies, red PSUs, which are marching ahead, while it's not necessarily everything else which is doing so well.
Well, you know, Niraj, we've had time to now reflect on his career, and his brilliant career is, I think his long-term compounding rate, from what I calculated, was in dollar terms above 40%. And we really, you know, pillar Warren Buffett for doing it at, 24% long-term. So he was heads and shoulders above everybody else in his class. So we'll grant him that. But I think the two things that stand out about Rakesh Bhaiya is the first, that he had this unique belief in India. And I think that shaped a 30-year career that he had in the stock market, that he always had only one mantra: always be bullish on India, never be not bullish on India. So no matter where the market fell, market went sideways, he always remained consistently bullish, and he was never afraid to express that by backing Indian promoters, backing Indian companies. I think one of the qualities that I have found over the last 30 years, that what makes between an average investor and a great investor, is a great investor is willing to take the risk is willing to put money on the table. And Rakesh was such a fast study. If he liked a company, in 30 minutes he'd close a deal for 100 crores or 50 crores. He had already studied a lot of business models of business companies. So when a promoter bought it to him, it was not new. And because of now his reputation, they were all, very cognizant of what he liked, the return on capital, good corporate governance, free cash flow, those kind of things. But what astonished me always in the 30 years plus that I've known him is that he's always ready to put money on the table. He's never afraid of a loss. And he realized that to make money, you need to spend the money and make it rise. So he was not trying to be cute, not trying to protect himself, not trying to hedge himself away, not trying to get away from his commitment. He always said very correctly that his word was his bond. And the ability to be bullish over a 30-year period in India, and we've been through very tough cycles in the last 30 years. It's not that we didn't go through Kargil or haven't had a gold exported or haven't had, but he always felt that progress it would come incrementally, but it would be in favor. The arc would lean towards progress in India. And he was absolutely right about that. He was absolutely right about putting money on the table and betting on unknown promoters, because some of them have created absolutely extraordinary companies. And if there was, as you say, a bull market foretold, he foretold it. And even in the depths of when he was in the hospital, when we visited him in the last few years of his life, even when he could barely speak to me, he would whisper and tell me, Ramesh, don't be bearish on India. He would always admonish me not to be bearish on India. So extraordinary legacy, and I'm really happy that we're celebrating such a happy occasion of his birthday.
Yeah, I remember one of the interviews. I mean, I didn't have the fortune of doing too many interviews with him, but 4 or 5 maybe. But in one of them, he had said that I see a picture of India that is vastly different from how maybe others see it, and this was way back. You think this is how he thought of India coming out? I mean, 3rd largest economy, 3rd largest stock market or 4th largest stock market, but en route to becoming arguably the largest or the 2nd largest in the world. Is this something that he would have foreseen way back? Because 2015, India was materially different from India in 2024.
It's hard to believe that, but he did see it. He had a premonition, and even in the last few years of his life, he had a premonition. He would tell me, Ramesh, I may not live to see it, but what I'm telling you is going to happen to India, you will not believe what's happening. Today is fairly common knowledge or common belief to talk about India being from a 3rd world country to the 3rd largest country, to India to be the largest growth economy among all major economies, is fairly common. Domestic investors, such an important part of the industry flow now, is very common. But this man had the courage and the vision, not only to see it, but also to act on it. So the fact that he emerged the other side, and despite 2 years, his portfolio being basically static, it has outperformed the market over, I think, pretty substantially, which shows the kind of businesses that he bought and the businesses that he held on to, and the wide variety, starting from Titan, which is obviously a gold jackpot to use these words, or this new startup called Akasa Airline, which is now making a serious dent in Indian aviation. Being an extraordinary stock picker, extraordinary understanding of markets, and I just feel, and I just say that on a personal note, that the price he paid for success was his health, and unfortunately he didn't live to see the full unfolding of the glory of his portfolio, of the country, of the new house that he built up. So I do feel sad about that. But in terms of legacy of learning, living, understanding, I don't think there can be a better teacher.
Yeah, I'm sure that's not the derivation, but you spend a lot of time with your next of kin and your grandkids. And I remember you telling me that Rakesh Jhunjhunwala always used to say that, one thing that I haven't done is spent enough time with my kids, because his kids were very young. So you kind of doing that. One more question. The one telling other thing was that you always told me that back up the truck and buy was something that you learned from him. Now, he used to do that very well. You reckon that in a market as diverse as it is right now, you are currently doing the same, Ramesh, that backing up the truck and buy because the opportunity size is so large. You've told me in the past that your famous line that why you regret not being a billionaire, but are you changing some of those things now based on his learnings from him or otherwise?
Well, first to come back to my grandchildren, as I've often told you, I really enjoy my time with Veer and Arna, and unfortunately he didn't get that much quality time that he would have hoped to and not see his kids grow up. That is also a real privilege in life. I've learned a lot from Rakesh Bhaiya and from a lot of other mentors in the stock market. And one of the things was, of course, backing up the truck and buying it. And while I'm getting incrementally better, have I been able to be a good pupil to his teachings? I probably haven't. I probably have fallen short. He would have been happy, but he wouldn't have been overjoyed because, you know, I've still come from a background where, you know, you're plagued with doubt, whether this will work or not work, whether there'll be a party or there won't be a party, whether the bull market will sustain or not sustain. But Rakesh never brooked any doubts. He was so clear in his thinking, so clear in his thought. When he put money on the table, he had complete confidence in the promoter, in the company, in the business, you know. Well, I am plagued a little by self-doubt. So while I think if I give myself marks, have I gotten better? Yes. Am I at the level I should be? No.
I have one final question, and I'll ask you to maybe elicit one more famous memory or one more favorite memory, because we've asked this to you so many times. You've spoken about this on various occasions, a number of memories. But if I were to ask you, because we are celebrating a happy day of Rakesh Jhunjhunwala, if you had to share one happy memory, maybe you've said it in the past as well, doesn't matter, but one happy memory.
Well, I'll tell you one poignant memories and one happy memory, because I think people don't know that, but when Bhaiya passed away, we had a prayer ceremony at the Bombay Stock Exchange. And after that, a lot of his friends, 15, 20, 30 was closest friends, wanted some way to celebrate his life and remember him, not in mourning, but in happiness. So a lot of us went down to a pub, which was his favorite, called Jeffrey's in Marine Drive. And we drank a pint there or two in his honor. and we all cheered because that's the way he would want it. That's the way he cheered everyone else, and that's the way he would want it. So he felt almost like a duty to do that after the press ceremony and remember him the way that he wished to be remembered. So that is the poignant memory. I think the happiest I see him was, of course, when his children were born. He is gifted with 3 children. I think when they were born, he threw, of course, these loud, lavish parties that he was famous for. He invited pretty much who's who of the town to those parties. And he just, was just so happy. One more memory he was very happy was his 50th birthday, which he took us all to Mauritius, and we started a trend of celebrating the big milestone birthdays, 50, 60, 70. But in those occasions, I've seen a rare, softer side for him, a man who's not only focused on markets, but focused on his friends, focused on his family, focused on enjoyment. So it was nice that, the story of his life is history of the Indian stock market, and I'm glad I was a witness to that story.
Yeah, and if there is a lasting impression to your mind that his, he was unequivocally, to my mind, the voice of the Indian stock market. Times were very troubled. He would come in, he would say things. People would certainly start viewing some tough moments also differently. But to your mind, the lasting legacy of a Rakesh Jhunjhunwala on Indian markets, is it stay bullish on India always, don't bet against India? Is it something else? What do you think?
It clearly is that. I think if you, the ability to take risks, of course, is there. The ability to think independently is, of course, there. But I think if you take a dominant stream of what carried him through and allowed him to keep placing the bets he did. I mean, remember when he came in the 80s in India, Niraj, the income tax rate was 90% plus. There was wealth tax in India. India was a closed economy. But he kind of foresaw that the tax rates would go down, that the trading systems would become efficient, that tariffs would fall down, that India would integrate to the global economy. After the Berlin Wall, he was pretty sure about it. And he betted accordingly. So this idea stemmed from that basic belief in a set, I remain bullish on India, everything that will happen will be good in India. And that was true irrespective of the governments that was in power. It was not that he was wedded to a particular government. He knew that every government in a democratically elected country would have to bring progress and growth and GDP growth for its public. And so only good things would happen. So it was this belief, I think, that was transmitted to me. After many years, it takes very hard to be that optimistic and that much of a soldier in the belief that you were. It took me a long time hanging around persons like him that made me realize the kernel of truth that he's expressing, that a country with 140 crore people, that kind of size, I mean, the size of India is so enormous that we're just coming to grapple with it. We can open a few million demat accounts every day. We just have that size out there. He kind of understood that before. So I would say that his lasting contribution, other than the great picks he made and the great parties he threw, was also that he taught us, remain bullish on this country, remain invested, and try and have independence of thought in what you approach the market, and which I also practice. I mean, we used to have a lot of discussions on my stocks was his stocks or my outlook was his outlook, but that was all in the fun and game.
Got it. I have one final question before we wrap up this conversation. Maybe it's a slightly difficult one, but I'm asking you, if you had to think, if there is one thing that you think about India for the next 5, 10, 15, 20, 25 years, by putting yourself in his shoes or thinking the way you think, yes, but also some inspiration from him, if I can use that term, what would that one thing be? It could be about India's growth, it could be about the markets, it could be about anything else. But something about India as you see it for the next 25 years, inspired from Rakesh Jhunjhunwala.
Well, I think what he taught us was that we need to always remain invested, okay? And while the markets are cyclical, they'll go up and down, and there are periods in which you can buy and sell. But broadly, you want to remain invested in the market. So I think and not only him, the other greats of the stock market, I've asked them this question in multiple ways. And the ways is, okay, you've been in this market 4 decades, which is the best decade that you've seen. Was it when liberalization happened? Was it in the tech boom? Or was it now? The answer question. And both of them would answer, or all of them would answer with the same breath, that the next decade is the best. So I've come back with that phrase that, the best time to invest in India was, of course, in 1991. When Manmohan Singh stepped up and gave the famous liberalization budget for the interim government. That changed the trajectory of our country, and now it's absolutely clear as you look back 30 years that that's what the trigger point was. The next best time to invest in India, and I'm sure Rakesh would agree with me on this, is today. Because you can't win this game if you don't play this game. Unless you invest, you're not going to profit from it. So I would suggest what he would say is that be bullish on this country. This country is a unique opportunity to become the third or the second largest economy over the next 20, 30 years. And you need to participate in that economy in full measure. And whether he says it or whether I now repeated him as a parrot, I also tend to believe that. While occasionally we'll move from cash or move from one stock to the other stock, we enduring remain bullish that only good will happen in this country. I think that's the lesson I've learned from him, and that's the lesson I'd like to pass on to the next generation, that you need to remain invested. To win this game, you've got to play this game. You know, if you're going to be scared of volatility, which is the nature of the beast, it will happen every day. I mean, right now the market's going up. On June 4th, it was going down. Volatility is the nature of the beast. So don't be scared of volatility in the market. Be scared of permanent loss of capital. And I think luckily we're on a good wicket that we won the ovarian lottery by being Indians, as Warren Buffett might say. But luckily, I think we're in the right place at the right time. So my advice to everyone is, this is as good time to invest. You know, I've been asked this question so many times at 40,000 the index, 50,000 the index, 60,000 index. Is it too high to invest? Isn't the market gone up too much? If I got a few dollars for that every time, I'd be a billionaire. I would have come up through my limitations, Niraj. But having said that, you could look at the index at 6 figures and say, oh my God, is it too high now? So, that's a mug's game. I don't want to play that. I want to remain bullish. I want to remain invested. Advice I got from Bhaiya, advice I also believe in.
Yeah, and advice that you're passing on to me, I would love to be thought of as the next generation from your perspective, because I just learn so much from you every time I hear you elsewhere or get a chance to talk to you. A bit of how Ashok might see you. Ashok is Ramesh Damani's son, is how I see you, Ramesh Damani. Thank you so much for joining us on such a momentous occasion and sharing some of those thoughts.
You're too kind to me, but thank you so much. And we all, salute Bhaiya on his birthday.
Most
I think it's a good occasion to remember him. And, I'll end with a quotation which I like to say about him. It goes that a teacher affects eternity because you never know where his influence stops. I think Bhaiya affected by his teachings a generation of stock market people, and they will carry his ideas on because he had, that he had n number of turtles, people who he mentored, people who he paid. And I've been, Niraj, I must tell you this before we end, I've been to innumerable 40th birthdays and 50th birthdays, and to a person when I've been there, they've always said, and thank you, Rakesh Bhaiya, for helping me in my career. Without you, I couldn't have done it. So he had that kind of influence and that broad influence. So like a great teacher, he will hopefully affect eternity also.
Most certainly. We may not have a pint, but we have a glass. So let's raise a toast to the great Rocky on his 64th.
Absolutely. Nostradamus.
Nostradamus. Okay. Let's nickname him for the next time. Thank you so much for joining in and speaking about it today, Ramesh Damani.
My pleasure, Niraj.
The Nifty ends flat in a week of consolidation. Mid-caps and small caps outperform the Nifty in a choppy week. HDFC Bank stock falls almost 5% on the back of dismal first quarter numbers. Current account, savings account deposit fell by 5% and corporate loans shrank by over 6% over the previous quarter. You save 75,000 rupees over 5 years if you buy the newly launched Bajaj Freedom CNG bike. The company says the bike costs 50% less to operate than a petrol motorbike. A fresh twist to the Hindenburg hit job conspiracy. Rajya Sabha MP Mahesh Jethmalani posts US Congress testimony that shows a clear link between Mark Kingdon and the Chinese government. He had a Midas touch in the stock market and a visionary when it came to the Indian economy. We remember India's biggest bull, Rakesh Jhunjhunwala, on his birth anniversary. And in the United Kingdom, the Labour Party wins a historic victory. Keir Starmer is the new Prime Minister. Prime Minister Modi posts a congratulatory message for him. Good evening and welcome. You're watching The Profit on NDTV and I am Nupur Talwar Suri. As always, this show is going to be bringing you all the market news along with the top stories from the country. Now, we begin with what happened in the markets today. Well, private sector banks dragged the Sensex and the Nifty today, but the markets ended in the green overall. Hersh is joining us for a quick check of the markets. Hersh, take us through what's happened.
Well, another decentish day, at least on the benchmark. We had markets which were trading lower for the most part of the day, but we've closed in the green. So really no complaints above the 24,300 mark. In fact, very close to 24,325 is where we've closed this week off. Let's pull up the heat map because what we've seen is a good coat of green on most of that Nifty 50 on this Nifty 50 matrix of sorts. And we've seen just about 16 stocks in the decline. But despite that, we saw markets for most part of the day trading in the red. And that's largely because of